morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and managing partner of Apis Partners, Udayan Goyal. Great to have you with us.
Thank you, Elliott. Great to be here, and thank you for having me on the show.
Okay, so before we get cracking, we are going to learn a little bit more about Apis Partners. So, Uday, Apis has been investing in financial services and fintech, I think, for over a decade now. For anyone not familiar, what's the thesis here?
So our thesis has always been around the intersection of financial services and technology. So as we move into this network era, we believe that financial services will essentially get reinvented through the use of technology. Now, obviously, in a world of AI, that's becoming commonplace. But I think when we started the firm in 2014, that wasn't so obvious, and it wasn't as obvious as it is as becoming day after day. And obviously, we'll talk a little bit about some of those trend lines and what's happening there. But that's been an enormous tailwind that has really changed the face of this industry and continues to change the face of the industry. And what we're trying to do is invest into that tailwind, sort of find out where all the interesting things are happening within the industry, where the interesting business models are getting created, and that's where we're placing our investments.
Okay, and you recently announced, I think, that cumulative portfolio realizations across your funds surpassed $1 billion for the first time. I think you had exits from Baobab, Icoca, is that how I pronounce it?
Right,
pushing
yeah.
you over the line. How big a milestone is that for Apis?
I think it's a pretty big milestone. If you think about our first fund was close to $300 million. Our second fund was close to $600 million. So we've returned our first fund in its entirety. And I think the cumulative returns that in terms of cash returns to our investors, is a very, very large milestone, particularly when you put it in the context of the industry itself, right? So over the last 4 or 5 years, the amount of money that's being returned to investors by the private equity industry has been sort of quite low, largely because the market conditions haven't been great. But I think one of the great advantages of investing into these ever-expanding industries, particularly technology-enabled financial services, this is an expanding industry. Just to give you a very sort of tangible example of that, Elliott, we invested in a business called Star Health in our first fund. Star Health was a health insurance company in India. Now, when we invested in Star Health, health insurance penetration was around 4% in India. So people who had private health insurance, it was basically around 4% of the population. By the time we exited that business, health insurance penetration was hitting 15%, right? So the market has sort of expanded over 3 times. Now, we invested in a company, even if we hadn't invested in a great company, one would expect to do reasonably well because the market's expanded. However, we invested in a company that had under 10% market share at the time of our investment. By the time we exited that investment, Star Health had over 50% of the retail market in India. So that company literally expanded. It went public close to $10 billion. We had invested in the $300 million range. We got out. I mean, we didn't get out all the way at $10 billion because by the time we exited, the stock price had come a little bit down. But obviously, we did very, very well on that investment. And the point around that is that when you're investing into these super expanding markets, your opportunity to exit always presents itself, whether it's a strategic exit or whether it's an IPO. There's always opportunities to exit those companies, and that's what we've been trying to do. And that $1 billion really exemplifies the fact that we very much focus on exits. And one of the things we do even before we make an investment is we figure out where the exit is. Our preferred exits are always to strategic investors. So before we even invest in a company, you think, who are the 4 or 5 most likely buyers of that asset? We will go and talk to those 4 or 5 buyers. We will figure out their interest in that particular segment and whether we think that we could exit that particular company to those 4 or 5 buyers, and then we'll invest in it. And so that's liquidity for us is very important.
Right, and I suppose Star Health would be one of your best investments. I guess that's probably why you gave that as an example. Not necessarily the best, but my question actually is kind of slightly counterintuitive. What's been your worst bet?
That's quite kind of an interesting one. I think our worst bet, we really only had one investment, over the course of all of the investments that we made that we didn't do well on. And I think that investment happened to be an ATM company in India. And the reason wasn't that the ATM company itself didn't do well. In fact, over the course of our investment, the EBITDA more than doubled. Revenues continued to increase, everything. What happened was that we made that investment in 2015. And in 2015, the outlook for cash in the world was fairly long, right? So we all lived in a cash economy. India was very much a strong cash economy at the time, and we felt like this was an opportunity to get into ATMs. At the end of the day, are retailers of cash, right? Just like they retail anything, ATMs actually sell you cash. So you go into an ATM, you get your cash out, and there's a fee that's paid either by the bank or by the consumer to get that cash out, right? So shortly after our investment, there was an event in India called demonetization,
Yes.
where, if you remember, where Modi removed all of the cash in the economy by saying all bank bills had to be changed for new bank bills. What that meant was that our stock, which is cash, disappeared. So for a year, we didn't have stock to sell. So that set back the company by a year. And then what happened was that a few years later, we had something called COVID, which we all remember. And during COVID, nobody used cash. Everybody shifted over to electronic forms. So what happened was that people's perception on the outlook of the usage of cash changed dramatically. So people thought that the decay rate for moving from cash into electronic forms of payments was 25 years, and suddenly it became 5 years. And what happens there is that the terminal value of your business, which is a retailer of cash, suddenly falls off a cliff. And so as a result, obviously, we weren't able to monetize that terminal value. And so we had to come out of that company in a very different way.
I guess sometimes the difference between a good investment and a bad investment is just in the timing. But look, we need to move on to the next section now, because we've heard about APIS, and now it's time to learn a little bit more about Uday. So, Uday, I mean, you spent the best part of 2 decades, I think, in the corporate world, working for the likes of Barclays, Credit Suisse, Deutsche Bank, before going out on your own. What was the moment that you decided to take the leap and thought to yourself, right, time for me to do something myself? And perhaps, why didn't you do it earlier? Or do you wish that you had?
Yeah, that's always that's something we always ask ourselves much later. But very interestingly, so my background. Very checkered background, Elliott. I mean, I started out, my father was a diplomat, so I lived all over the world. So I had this great privilege of learning different cultures and different people, moving every 3 years. And I ended up, going to boarding school in India. Then I went to boarding school here in England. And then from there, I ended up going to university. And I actually studied immunology and genetic pathology at university. So completely different, with a view to becoming a doctor, but ended up graduating, and then I felt I really didn't want to spend more time in the lab doing research, and so I took the first job that was thrown at me, and one of that was actually, as you mentioned, Barclays BZW, which was the investment bank, and moved from there to DLJ, and ended up in the late 90s, in 98, starting to work on something that became known as financial technology. So I was really one of the first people in the world to start to bank this world called financial technology. I actually worked on an IPO of a company at that time called WorldPay, which was part of NatWest, and that got me really interested in this kind of very esoteric field, and I ended up becoming the global head of financial technology at Deutsche Bank after that. And in 2009, in the midst of, as you may remember, the financial crisis, I said, "Here's an opportunity. I could stick around in banking, but I love what I do so much. Let me go and find a way to actually invest in this and." Put my money where my mouth is, and actually go and put some money into these companies. And so in 2009, I left, and much to the dismay of my wife, I said, I'm going to set up my first company. And so I co-founded a business called Anthemis Group, which today is one of the largest early stage investors in fintech in Europe. And then I ended up running that business till 2014. And then I got back together with my co-founder, Matteo. Matteo and I had worked together. You remember I was at DLJ. We'd worked together from 1998 all the way till 2009. We became best friends. We were very close. And he had gone off to a buyout firm at the same time that I had gone off to set up Anthemis. And we got back together in 2014, and we said, let's build something together that was more on the private equity end of the investing spectrum rather than what I was doing at Anthemis, which was very much in the venture end, and what he was doing, which was very much at the buyout end. We wanted to somehow meet in between and focus on fintech, and that's how I ended up, setting up Apis, and the rest is history, I guess.
Lovely. Well, always interesting how people find opportunities in the face of crisis or in the wake of a crisis. Want to get away from Apis for a moment, if I can, because I understand that you actually, you're a bit of a connoisseur when it comes to wine and coffee. You actually roast your own coffee and make your own wine. Two very different skills, one imagines, but you obviously like to drink things that you enjoy drinking, and maybe you think that, the best way, if you want to do something properly, you've got to do it yourself. But tell me about how you got into making your own coffee or roasting your own coffee and making your own wine.
Actually, both things have something in common, and that's what people don't realize. Is I think what we call terroir, right? So the character of both coffee and wine reflects where the beans have been grown, or indeed where the grapes have been grown, and the terroir of it, and that's what fascinates me about both coffee and wine. So I got into coffee many years ago. I just loved the taste of it, and then I started to discover this concept that if you get a geisha bean, or you get beans from Panama or Costa Rica or Brazil or India, indeed, they're all very different, and they all really reflect the terroir that they're grown in. And then you can actually subtly change the characteristics through roasting. And much the same way, wine, the grapes actually take the terroir, and you can subtly change the characteristics and refine the characteristics in the vinification process. So they both become quite interesting. I'm not yet vinifying wine. I'm blending, which is different. Whereas in the beans, I'm actually starting to roast and actually really understand how roasting techniques can change that concept. In a way, I liken it to investing, right? Because you can't change the terroir of a investee company. They come from where they come. But I think you can come in and you can actually subtly change it in your own way through your investment period by providing the right advice and doing those sorts of things.
And perhaps you can change their outlook by plying them with coffee and wine that you've made yourself as well. All right, Uday. So look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with the co-founder and managing partner of Apis Partners, Udayan Goyal. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Uday, let's talk about the future of finance. So as an investor, you've of course had a front row seat through the global financial crisis, which I guess was partly your inspiration for setting up Apis in the first place, the pandemic, and now, of course, let's call it a period of geopolitical uncertainty. How would you describe the environment right now for fintechs?
So I think it's probably the most exciting time we've ever been in for both financial services and indeed technology-enabled financial services. We are literally in the third great transition. We've gone from the industrial era to the information age, and now into the network economy. And each actually shift rewrites who provides financial services and to whom. So this network economy actually means that financial services are increasingly embedded in non-financial platforms. Think of e-commerce, think of telecoms, health, rather than being delivered by standalone banks or financial services companies. Our entire thesis is actually built on the back of this. The infrastructure layer that actually powers embedded finance So if you think about issuer processing, we just invested in a business called Paymentology. Digital banking, we're invested in a business called Time Bank or GoTime. Micro lending, insurance technology. All of these things are essentially embedding financial services into everything we do and our day-to-day lives. And that's actually powering this enormous growth in financial services and indeed technology-enabled financial services.
Right. And I mean, just on the geopolitical side of things, though, I'm just wondering what impact on the future of finance and financial innovation it might have, because, we now hear a lot about currency sovereignty and concerns about the way that stable coins are going to, potentially going to erode currency sovereignty. There are concerns about technological sovereignty, particularly in the European Union vis-a-vis the United States, and concerns that, perhaps the US will at some point decide to cut, some of the AI technologies that we're seeing coming out of the States off from Europe, and then Europe wouldn't be left with anything. One reason why the CEO of Mistral earlier this year was talking about why they need to race towards, super intelligence to make sure that Europe has, sovereignty in this sphere. So I'm just wondering what you take away from the current tensions and the current situation in terms of the impact on financial innovation and the future of finance.
So I actually don't. It's a little bit of a complex story, and I actually think that there's opportunities and there are risks associated with the geopolitical climate that we're in. Now, coming back to the couple of points you made there, right? If you think about financial services, the sovereignty question of financial services has become a big issue, right? Which is why, if you think about payment systems, a lot of governments now want to have autonomous payment systems within their economies that are not subject to extraneous factors. So, for example, if you're doing dollar clearing, you are subject to the Fed in the United States, and you don't want that. And that's why, when, for example, the Ukraine war started, the Russians found themselves cut off from Visa and MasterCard, and now they built their own internal payment system. So that's one aspect of it, right? And I think that has actually created opportunities for financial services and fintech companies to build some of this new infrastructure layer that's more autonomous infrastructure layer. Now, you talked about sovereignty of currencies. That's a little bit of a more complicated. You said stablecoin is eroding that. I would actually argue it's quite the opposite. In fact, stablecoin is a way of actually solidifying the sovereignty of currency. So if you look at what is the biggest stablecoin currency today, it's the dollar. You've got Circle USD and Tether. These things are actually, very, very large pools. In fact, today, Tether is the 10th largest holder of T-bills in the world. They back it. And so what's happening there is that you're creating the stable coin, which is being used now for cross-border money transfer and being used, including we have a company called Thunes that builds that infrastructure layer for cross-border money transfer that's actually reaffirming the dollar as being a global reference currency. At the same time, the Tether is also doing a gold-backed Tether, AUT. And so that becomes sort of a counterbalance to that. So I think you're seeing this ecosystem develop where the traditional fiat currencies are now moving into this stable coin, and stable coin is being used at the infrastructure layer to move things around. And I actually think it's reaffirming in many ways some of these reference currencies, in particular the US dollar, because the US dollar continues to be a pretty strong reference currency.
Right.
So,
and I suppose on the sovereignty side of things, it was more that almost 100% of, stable coins out there are denominated in US dollars, and certainly no less than, Christine Lagarde, the president, of course, of the European Central Bank, has expressed concerns about, currency sovereignty. But I don't want to kind of go down too much that rabbit hole, because we've got
I think she should be concerned, 100% should be concerned. And I think part of the reason behind that is that Europe was very slow on the regulation side. On the Genius Act in the United States, Europe was ahead, and then suddenly they went back. And they've sort of let that go. And I was with the CEO of one of the major French banks the other day at a dinner, and we were chatting about this. And, they are trying to issue their own stablecoin, euro-backed stablecoin. And what I was saying was, you got to do this quickly, because by the time you do this, the United States is going to eclipse you. And yeah, I think she should be pushing this agenda.
And again, on the AI front, in terms of technological sovereignty, of course, earlier in June, the European Union did put out a whole batch of, proposals for, ensuring that Europe is well placed for, all the advances that artificial intelligence is potentially bringing. I'm just wondering that in the context of AI, which sectors, I suppose, since we're talking about fintechs, talk about financial sectors, which sectors would you say are adapting or best prepared for the future possibilities that AI advances may bring?
Well, financial services as a whole is like probably the sector that's most attuned to improvements with AI. Why? Because the native product of financial services is digital, right? And so if you have a digital native product, to the application of AI automatically becomes so obvious and so easy that you can actually do a lot with that. Now, on the AI point, just a little point that you had talked about a little bit earlier, Elliot. On the AI point, I think AI is a very, very complicated topic. You said, the United States could cut off technology.
I'm not just saying that there are concerns in the industry, and this was expressed by the CEO of
There are concerns,
Mistral,
but the
among
truth
others.
is,
Not
it's
my
not.
view, obviously.
Yeah, absolutely. It's not a one-horse race here, right? You've got the Chinese who are putting out large language models that are open source large language models like DeepSeek, and by doing that, they're giving it away. So a lot of the emerging markets where we also invest in, as you know, a lot of those emerging markets are very much starting to use these Chinese models because they don't have to pay for the Chinese models, or indeed the Chinese models are so much cheaper. So there is an alternative. And so this is, from a geopolitical perspective, becomes a little bit of an arms race between countries like the United States and China. China, of course, has this great advantage that it controls the entire physical manifestation of AI, right? So they have 17 times the energy production of the United States, the excess energy production of the United States. So they can build data centers. They have the ability to have the rare earth metals. They have a lot of the physical side of AI, which is why on the software side, they're giving it away. Now, application to financial services, actually, what we often don't realize is that countries like China have been the first to apply AI to financial services. A lot of their financial services companies have been using AI for a lot longer, and now this is filtering into the rest of the world. But in terms of subsectors, every subsector within fintech or financial services is benefiting from AI. Think about credit and credit decisioning. That just lends itself to AI. Think about anything in the middle and back office in a bank. All of that lends it. Think about customer services. Go Time Bank, which is the bank that we are invested in the Philippines and South Africa. They've been using AI for the customer services side for many of their processing for a long time. And they've removed a lot of inefficiencies by doing so. And you're going to see that in pretty much every single subsector of financial services. We have a business in the UK called Moneybox. Moneybox is now one of the largest providers of asset management to the mass market. So you download an app, you can put your money 25 to 35 years who are using it. That business has quadrupled in the last few years.
So advanced businesses are clearly able to take advantage of this technology, and that's helping them. I'm just wondering if we go back to the other end, kind of, more the startup stage of fintechs, given the mind-boggling sums that are being thrown at artificial intelligence right now, and I mean, we just have to look at three examples as the SpaceX IPO or the Anthropic or OpenAI IPOs that are upcoming and are going to supposedly raise, like a plus 200 billion or so, and that's not even including the amount that Google's raising, or Alphabet, I should say. So does all that money being thrown at these large AI companies mean, naturally, that there is less money that's going to be available for fintech startups or fintechs that are further down the line, but perhaps aren't large enough yet to be making a lot of money and taking advantage of all this technology to kind of cement their positions in the market?
I mean, to be fair, I haven't seen that. I think if you look at the secular trends of capital coming into financial services and financial technology, it continues to grow. There is and why is that? Because at the end of the day, AI is a technology that needs to be applied to specific verticals, right? And one of the main verticals that it's being applied to is financial services. The next big vertical that it's going to go into is industrials. In fact, you may have seen Prometheus, which is Jeff Bezos' new startup, is going to focus on that vertical. So you need to apply AI into each of the verticals, and the money is flowing into the application into each of those verticals, of which financial services is one. So I don't see it necessarily pulling back. We see obviously this super cycle of CapEx going into AI, which happens at every time we have one of these general purpose technologies. So the last time this happened was probably with the internet, and obviously in the industrial era with the steam engine, you had a lot of CapEx going in, and that because they see the opportunity of creating efficiencies from that technology. So we see that, but that's independent, I think, of what's coming into financial services and indeed fintech.
Okay, so look, Uday, it's time now for our round of rapid fire questions. Are you ready?
Absolutely.
Lovely. Okay, so I've got 90 seconds on the clock. That's why I was fiddling around with my phone. Going to get through as many of these as we can. I'm just looking for one-word answers, and we'll try and get through as many as we can in the 90 seconds allowed. So I'm starting my clock, and away we go. What fintech segment has the biggest potential over the next 5 years?
Credit.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Payments.
Are bank bosses ready for the AI revolution?
No.
Are customers ready?
Yes.
Do you think European and US regulators have kept pace with all the new possibilities and behaviors we're seeing in the financial services industry?
No.
Have you personally ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
No.
Are bank branches part of the future of finance?
No.
On a scale of 1 to 10, 1 being the lowest, 10 the highest, how probable is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
10.
Out of 10. That
10.
CBDCs, central bank digital currencies, will become a mainstream reality in the US or Europe?
5.
That you'll be able to open a crypto account at a top-tier bank?
10.
That SWIFT will still be the main tool used for transferring money around the world?
5.
That a new card or non-card based rival will emerge to challenge Visa or MasterCard and the like?
7.
That we'll see a top-tier bank or insurer bought by a fintech?
10.
Amazing. We have got through all of our questions with 5 seconds to spare. So I think that is a record for this section. I'm just going to wait till we hear the alarm. There we go. So I'm afraid, though, that is the end of our round of rapid-fire questions and for our conversation. So I really just want to thank you, Udayan Goyal, the co-founder and managing partner of Apis Partners, for joining me today for that conversation. Thank you so much.
Thank you so much, Elliott, and thank you for having me again.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.